What is going on, everyone? Welcome back to the channel where we discuss finance, real estate, and investing. We have a great video today that goes over a key step in the home buying process. Specifically, we're going to discuss the differences between getting pre-qualified and pre-approved. See, what happens most of the time is lenders use these words interchangeably, but there are some very key differences. So we're going to discuss the differences between a pre-qual and a pre-approval, and we're going to look at which one works best in each particular situation. My name is Lewis. Let's get into it. Pre-qualified versus pre-approved. What is the difference? To help us explain that, we're going to use this handy dandy article from NerdWallet that I found here, and we're going to start by discussing what a pre-qualification is. Well, generally, in the pre-qualification phase, you describe your credit, debt, income, and assets. And based on the overall financial picture, the lender estimates how much you may be able to borrow. Some lenders will do a credit check. However, from experience, I can tell you that most do not with the pre-qualification. You can get pre-qualified over the phone, online, or in person. And getting pre-qualified can give you a sense of your financial readiness and introduce you to various mortgage options. It's often a good step for first-time buyers who are just testing the waters and are not ready to jump in. Side note from the article. A pre-qualification typically is based on verbal information provided by the borrower. So this is an initial call with a lender. And during this call, they're going to ask you questions like, how much do you have saved for a down payment? What does your job history look like? What does your income look like? How does your credit look? And based on this information, they're going to provide you with some loan products and options and give you some additional details on like where the rates are, what your payment would look like. And it's a really good phone call to initially discuss not only how much you qualify for, but how much you feel like you can comfortably afford. So now we're going to look at what a mortgage pre-approval is. This is typically when the mortgage professional takes the process to the next level. Why? Because a pre-approval generally requires you to provide proof of your financial history and show stability. The lender is going to verify your income, employment, assets, and they're going to take a look at your credit report so that they can list out all of the debts or liabilities that you have so they can properly assess the situation and determine how much of a loan you qualify for. In other words, they're trying to determine what your purchasing power is. This is the point at which the lender will determine which mortgage options work best for you, the different products that are available, and they really take a deep dive into what's going to work best for your unique and personal situation. Once they look at everything, they're going to determine if you satisfy all of the requirements of the lender. And if you do, they're going to give you what they call a pre-approval letter. And that's going to state the amount and the type of mortgage that you qualify for along with any terms. But it is important to note that at this phase, the interest rate is not locked in because you do not have a property to attach it to. So now that we know what a pre-qualification is and what a pre-approval is, I want to take things just a step further and give you my personal feedback on when I think a pre-qual should be used versus when I think a pre-approval should be used. As a general rule of thumb, I think that if you're 6 to 24 months out, I would recommend just getting pre-qualified, having a discussion with the lender, discussing what's going to be needed, like how much employment history you're going to need, how much you need to have set aside for a down payment, how your debts impact your ability to qualify, and what your purchasing power will look like. Now, if you're looking to purchase inside of the next 6 months, I would highly recommend getting pre-approved at this point, because a lender will be able to validate all of the information you provide, and they'll be able to review your file through the lens of an underwriter. What that'll allow them to do is kind of hone in on any maybe red flags or issues or roadblocks that you may run into in the lending process. And if they can identify those up front, you can clear them up before you even get under contract. All right, so that is going to wrap up today's video. If you found the information useful, please consider liking, subscribing, and sharing with your friends. If you have questions or comments or even ideas for new videos that we can do moving forward, please leave them in the comments section below. Thank you again so much for taking the time to watch this video. You guys have a wonderful day. Take care.